Hi, I'm Bill Kristol. Welcome to Conversations. I'm very glad to be joined today by my friend Stan Veuger, a research scholar at the American Enterprise Institute, very distinguished young economist, very distinguished for his youth and very young for his distinction, I would say. Visiting lecturer at Harvard, where I think in the past you've taught with your late teacher, unfortunately passed away, about a year ago, Marty Feldstein, with whom we had an excellent conversation, I'm going to say, 3 years ago or so, which I still recommend to people. Stan, we've done one conversation before on Europe, but today we're going to talk about the economy. Like where do we stand here 3 months in? Was it about 3 months? We're on June 10th, so about 3 months into the coronavirus-induced economic crisis. And so, welcome.
Thank you, Bill. Glad to be back.
So I thought let's try to lay out. Obviously, we can't predict everything perfectly, or even maybe imperfectly, but let's lay out how to think about the economic situation, the economic forecast, the key decisions coming up, key inflection points, and so forth. So, where do we stand? I mean, how deep a hole are we in? How long lasting a one do you think it is?
So the hole we're in is fairly deep, I'd say. The current unemployment rate is a little over 13%, and if anything, that's an underestimate. And so that's a very, very bad state for the labor market to be in. It's worse, in fact, than at any point during the Great Recession. Now, I guess most optimistic way of looking at this is that it's in large part this damage was a choice driven by the public health situation, right? So we shut down a significant number of industries. Other industries have had to operate under significant constraints, and so we effectively made the choice of restricting both supply and demand in a number of sectors of the economy. And so the most positive way of thinking about the state we're in is that we will eventually undo a lot of those restrictions, and in fact have already started undoing some of those restrictions in many places across the country.
Yeah,
and
no,
so that'll automatically...
That's an interesting. I mean, people say, well, it's an external shock, so it's sort of as if sometimes they say it as if it doesn't count or something. It's not like the financial system melting down, which somehow was, an internal problem of the economy. I guess there's some truth to that, right? In a funny way, you presumably recover more from an external shock than some fatal flaw in our banking system. Or do you? I mean, is the damage any less because it came about from a public health?
I mean, I think the problem is that the initial shock is a little larger, so it was very fast and just deeper, and so that makes it harder to dig out. There is also the problem that we are faced with tremendous uncertainty, I think, about the future course of the pandemic. We've seen the situation improve in a number of countries in East Asia, in parts of Europe. In the U.S., it looks like we're currently at a plateau in terms of infections, hospitalizations, those kinds of things. But there is, I think, a risk that in some states, hospitals will be overrun again. The experts tell us that there is a risk of a resurgence in the fall of the disease. And so those sources of uncertainty both make it so that we cannot really start the recovery in the way that we can after a typical negative economic event. And it also, while we're recovering, creates tremendous uncertainty for businesses and households as they plan their investments, their hiring, their spending. And so I think I wouldn't minimize the problems we're currently facing by saying we can boost the economy by reopening, but that is the most positive way of looking at it.
I mean, I guess another way of saying what you're saying is it's a mistake to think of it as this one-time shock, and so now we're recovering from it, so to speak, the way if you have a bad accident or something, you then get better, because the shock continues to overhang us, right? I mean,
that's exactly right. So we obviously it overhangs us in the two ways I just mentioned. It also just overhangs us in the practical sense that there continue to be significant restrictions on both the supply and the demand side in terms of what we allow ourselves to produce. Right? Hospitals are not operating as they usually do. Restaurants are operating under severe restrictions in the places where they are open at all. A lot of non-essential business operates with new additional precautions that are costly, and A lot of customers are presumably trying to minimize their visits to all of these places. The entertainment industry is closed down in many parts of the country entirely. Certainly large gatherings, sports events, concerts, all those things. Aviation is still down tremendously, something like 80% according to the TSA. And so, there are large parts of the economy that are shut down sort of by choice. But of course, that means that the people that used to work in those industries and the businesses that operate there are not consuming the goods and services produced by the rest of the economy to the same extent, right? And so that creates sort of a non-choice consequence of the choices we've made to combat the public health crisis. Right?
And
there's spillovers from the response to the public health crisis into the rest of the economy.
Right, and there's also sort of public choices that are being made almost regardless of the government choice, and the original choice to shut down.
For sure. So when I say it's our choice, I don't mean it's a government mandate. I mean it's our choice as a society, and so that includes both responses through the public sector, but also through civil society, through people's market behavior.
And do we have a sense? I mean, how, as of now, June 10th, how much people, leave aside the government for a minute, and you got some governors who are loosening up more than others and so forth, and that'll continue to be a debate and will be somewhat dependent, I suppose, on the future course of the virus. But do we have a sense right now how much people, in terms of their own behavior, their own revealed preferences, I guess, are willing to kind of get back to normal business or not?
Yeah, so I think it varies a lot from activity to activity. As I said, aviation is still down tremendously. We don't really see people organizing conventions or large events, even for August or September. Restaurants are still, operating at much lower levels of output than they usually do. I think the data has only been coming in gradually. One thing we can say is that the jobs report from Friday, which incorporates at least some of the consequences of the reopening, saw only 2.5 million people returning to work. And while that was a good number, it's not a lot more than 10% of the people who have been on temporary layoff.
Yeah, put that in perspective.
Yes.
Give us those numbers. So basically, how many people lost their jobs?
So so the labor force was about, say, 160 million people, going into this crisis. And so for the unemployment rate has gone up by about 10 points, right? So that's 10 percentage points. So that's about 16 million people. And so then 2.5 million people is, about 10% of that, a little less than 20%, right? So those are the orders of magnitude you should think of. 1 out of 10 people have lost their jobs, and 1 out of 10 of the 10 people, 1 out of every 10 people who lost their jobs have gone back to work. I think that's how I think about it.
So for all that it was good news, and it might signify a bottoming or a temporary, let's hope not temporary but permanent, but whatever, some kind of bottoming for the economy right now. Yeah, I'm struck how much of the coverage seemed to treat it as if, well, we're just booming back, and if people lose sight of the fact that it's 1 in 10 or 1 of 8 have come, we're still 7/8 of the way down from where we were.
The way I think about it is as stabilization, right? So there was a risk, I think, that the economy would go into a tailspin where the restrictions in the industries that can't operate as usual would spill over into many other parts of the economy and into the financial markets, into credit markets, and that dynamic would become self-sustaining, right? And so that the floor would be very far down. I think in part because of the very aggressive policy response, that has not happened, and for now we're at a plateau, so to speak. But I don't think that means, exactly as you're saying, I don't think that means that we'll automatically go back and we'll be back to normal in September. I don't think that's a realistic process.
Yeah, I want to get to the policy response in a minute, and you were quite involved in arguing for a response somewhat like I think what we did, and I think so far maybe some vindication that you were. It was a little unorthodox, maybe unconventional for a conservative free market economist, but I think maybe you were right on that. But before we get back to that, so so it sounds like what you're saying, to put it in sort of simple ways, we don't seem to be spiraling into the Great Depression as opposed to the Great Recession. On the other hand, we're still I mean, if you had told people we're still way below where we were, and it's not obvious that we're zooming back to where we were in 2 months or 4 months or even 12 months.
No, that's absolutely right. So the typical forecasts, so by the Congressional Budget Office or by the by private market forecasters, is that that unemployment will be above 10% by the end of the year. And so, maybe we'll do a little better. Maybe it'll be 9%, but that's still a terrible outcome. Obviously, that's very elevated unemployment that we've really only seen a couple times before since World War II. And so, I think that's what people should keep in mind when they look at these at these relatively positive news facts. Right, 2 million new jobs is obviously a tremendous number, but that's facilitated by the fact that we lost 10 times as many. I think a lot of people who don't pay tremendously close attention, I think are easily tricked by these large numbers, and it's hard to put them into perspective. In addition to that, I think it's easy to mistake changes for levels, to think, oh, well, we're on the way up. That must mean that things are going well, but that's obviously not the case. If you continue to be at a level that means that a lot of households are struggling or would be struggling without government support.
Yeah, I mean, maybe I'm just a little congenitally bearish on markets, on the stock market, and the economy and all, but it seems to me people will say, for example, I think it would be a bullish thing to say, I think, that restaurants, airlines, conventions, tourism will come back to 90% of what they were in 6-9 months. I think that would probably if you look industry by industry, and we should probably talk a little industry by industry, that feels like unlikely to me. You're just looking around and talking to people. But of course, if you step back and say we've had a 10% drop in of consumer spending in major industries in the United States of America, that's a massive drop, right? I mean, in a normal world, so to speak, that you're looking at a very severe recession. And so
absolutely. So those same forecasts that predict 10% unemployment by the end of the year, they typically forecast only around 6% of a drop of GDP, right? And so that's the kind of output loss that would take us to 10% unemployment. It's a 10% drop in output.
I mean, I made up the 10%, obviously, but
I'm just saying that really is the sort of the scale you're thinking of is right? That even if we lose 6 or so % in output, that may still mean that the unemployment rate would be 10%, right? Because it means that a lot of businesses will be wiped out. The output losses will be concentrated in certain industries. It's not as easy for people to switch from one firm to another across industries as it is to switch within industries. And so, the adjustment process will still be incredibly painful, even if, 6%, as you're saying, doesn't sound that bad, right? You think, oh, well, that's, it's less than 1 out of 10, but it would create tremendous havoc if that's where we're going.
And it does. And right now we're worse than that, right? And so that envisions a recovery, and presumably most of the recovery would not come in tourism, restaurants, and so forth, but some of it has to. I mean, and so that for me is just a huge question. I mean, do we really think that, I don't know, 80% of the restaurant business that was happening in Washington, D.C., maybe again an unusual situation, maybe a slightly worse case, is going to be back in 6 months? I guess I don't, but maybe a lot of this is natural forces, and once people come back, they come back, and right now you're at the bottom and you don't see things clearly. I don't know. Do you have a view on that in terms of some of the big industries and some of those forecasts?
No, so I think it'll be I think some industries will still be significantly smaller. I think the thing to keep in mind is that they shut down almost entirely, right? And so you can make up a lot of ground. And so in growth rates in the third and fourth quarter, that will look really good, right? If you go down by 50% in the second quarter, like restaurants did, like hotels did, like entertainment did, even healthcare went down. Healthcare went down by almost 40% in terms of output. And so if you go back up by half of that, that's a tremendous level of growth. And I do think in many of those industries it's possible, right? Obviously, the healthcare industry is not going to continue operating with, everything shut down except for hospitals, and the hospitals are empty because they're waiting for COVID patients. Right? That's not a sustainable situation, and so that'll change, and we'll see growth there. We've already seen restaurants reopening. Certainly, with outdoor seating and a little more delivery, you'll see some of that output coming back, right? It doesn't mean it has to go all the way back up to 100%, but there is a lot of room for recovery there exactly because the original shock is so negative. So those industries will see, I think, tremendous growth. It just comes from a super low level.
And so what would you look like over the next few months to sort of judge as we're going forward? Are we on the sort of better end of the recovery, on the worse end? What would be an indicator of genuine that we should panic?
Well, so I think if the number of people who are unemployed continues at levels similar to where we are now, that's concerning, especially if a lot of the people who are now on temporary layoff start saying that they have become permanently unemployed. I think that'd be very concerning on the labor side. If you start seeing large numbers of small businesses going under, that would be very problematic. And then in certain credit markets, I suppose if you see rates going up, that would be concerning too. I think those would be the three most obvious indicators. And then of course, there are macro aggregates, right? If consumption doesn't go up at a reasonable pace, then that's bad. If overall GDP doesn't go up at a reasonable pace, then that would be bad too. But I think bankruptcies and businesses going under, people becoming permanently unemployed as opposed to temporarily unemployed. Basically, everything that indicates that we're basically in stasis as opposed to recovering, I think would be a bad sign.
And do you think that would put real strain then on the financial system, on debt markets and so forth? I mean, that's I guess the nightmare scenario, right? Is where you get beyond a very bad shock that clobbers a bunch of industries, hurts some others, but at the end of the day, you kind of come back gradually versus a true kind of fiscal or
yeah. So I think that's one effect. The other effect is on business owners, that if they are wiped out, it makes it much harder for the economy to recover because people won't be starting the businesses that we need, to hire people back, start producing goods and services that are either better suited to the economy as we continue to deal with the pandemic, or that are just the regular businesses that struggled for a while but have to come back. And so I think both of those effects could be problematic. It's in that sense, I think the risks resemble some of what we saw after the financial crisis, which is that in places with more debt overhang, the recovery was slower, and so that I think is a risk.
But I want to get to the policy stuff in a second too, because that's presumably has had a big effect and could continue to have a big effect. But so if we were having this conversation, and we should have another conversation on Labor Day, let's say, so what's that, almost 3 months away? Is that right? July, August, September, yeah. I mean, what would sort of reassure you? I mean, how much more progress would you like to see and expect to see, it's reasonable to see, versus, and what would really alarm you?
Well, I think if the unemployment rate is 13% or higher, that would be very bad, right? Which is about where we are now. There's been a kerfuffle over some of the classification problems that the BLS has had to deal with, and so we're now at a 13% that you should probably read as a 16% unemployment rate. If we're still in that range, I think that would be extremely bad news. I would be worried if you started seeing mass layoffs continue at the state and local government level, which should be easy to prop up. And so if we can't do that, I think that's a good indication that the policy response has struggled. And again, I think I'd be very concerned if you just saw large numbers of businesses disappear. I imagine we'll talk about the payroll protection program and some of these other support programs in a bit, but there is still, I think, a chance that businesses will just will run out of cash, even despite the large infusions many of them have received, and if they do, that just means that demand hasn't recovered, and we should start worrying.
So let's talk about the policy response. I mean, you were involved in making the argument for something like what turned out to be PPP, the aid to small businesses, which allowed them to keep people on the books and got the money actually, and therefore kept people on the books longer than they might otherwise have. I mean, has that worked? How much is that masking what's about to be unemployment, in the sense that people still say they're employed because they are, perhaps because there's been this money flowing into the businesses, which is contingent to some degree on their keeping people employed? How much are we buying time? How much are we actually addressing the problem, et cetera?
Yeah, so the one of the very large components of the relief effort so far has been the payroll protection programs. The federal government has spent about $700 billion on that part of the relief effort alone, and that is a lot of money, right? So to put it into perspective, that's about 70% of the stimulus bill during the Obama administration, which was really the major fiscal policy effort there. And so 70% of that major effort has gone to this program alone. It's a program of forgivable loans that businesses with fewer than 500 employees in most industries and somewhat larger ones in other industries can take. They have to spend at least 60% of that money on payroll, and then they can spend the other 40% on things like mortgage interest, rent, utility payments, those kinds of things. So the idea is you can pay your cost of labor and your fixed costs from this money, and if you do that, and if you keep your headcount intact, then the government will turn this loan into a grant, right? And so it's just a direct cash transfer, basically, to firms. Now,
but the loan amount is limited to what? About a few months' payroll or something like that?
Yes, that's right. So it's limited to 2.5 months of your payroll.
So at some point, that money, it's not like forever, right? So
no,
you need to actually have consumers showing up again,
that's
at some
right.
point.
So but I think there's a good reason for that. I mean, I think we could consider extending the program, maybe a slightly less generous version of it, but obviously this is not something we want to make permanent, right? Because at some point you're keeping more zombie firms afloat than you're helping otherwise viable businesses who are just struggling because of temporary restrictions. And so I think the single most important thing that this program has done so far is it has given us the option of returning to quasi-normal, pretty quickly, right? We did not see, millions of businesses go under during the weeks of very aggressive lockdown, and I think that would have happened otherwise. The census does a survey of small businesses, and small businesses in that survey now report having more cash on hand than they did in April, and so you do see really positive effects there. I think the next step in the evaluation process will be to see how many of the people who are now on temporary layoff will actually go back to work, right? And so how many of those ties between firms and workers have remained intact thanks to the support provided by the federal government, versus how many of those temporary layoffs are becoming permanent. And so that I think it's too early to say that. I think it's it's somewhat positive that there are not millions of permanent layoffs yet in the BLS statistics. But I really think it's a little too early to say. I mean, in part, this depends on the extent to which we manage to reopen in August, September, right? A lot of businesses will be able to bridge it till then with this money. If the economy remains in quasi-shutdown for the rest of the year, it'll be much more difficult. So I think it is a little too early to evaluate, but I think that the first signs are very positive, and I really do think that if you look at the state of the labor market that people had been predicting until Friday, those predictions were much more negative than the outcomes we saw. And I do think that one of the explanations for that discrepancy is that we had this program, right? It's a massive program. It doesn't fit very easily into the typical models people use to predict the state of the labor market and to predict macro aggregates. And so I think the the fact that we outperformed forecasts fairly significantly, I think, may well be in part driven by this program. And look, if this program ends up reducing the unemployment rate by 3 to 5% by the end of August, then it's a spectacular success. I mean, it took years and years to shave that number of percentage points off the unemployment rate after the financial crisis, and so I think that would make it money well spent. The other thing to keep in mind, I think, is that this is not it's not money wasted in any sense, right? Even if the program doesn't work flawlessly, there are distributional implications from sending this much money out to people, but it's not lost. It just it goes from taxpayers to business owners and to workers and to the owners of business premises, and so there are redistributional effects, but it's not it's transfers. It's not buildings we set to fire.
I mean, is sort of an economic version of flattening the curve, I guess, right? Trying to suppress the severity of the impact in a way that our institutions, including businesses, can handle now a recovery, albeit there will be long-term consequences, obviously. And I think the moral argument for it, I was struck when you and some of your colleagues made this argument, and there was some pushback. I want to talk about that. I mean, how unusual in a way this program is. The left is more used, I think, to let's have more unemployment insurance, let's have more generous welfare benefits in effect, and the right is more of a, hey, creative destruction, free markets. I mean, I found an argument with my conservative friends that this is not a normal creative destruction situation in a recession. It was not, because you could be the best restaurant and the most efficiently run restaurant in Washington, D.C., and you could be the worst, serving horrible food that poisons people, and you both equally were put out of business by the shutdown. So it's not as if the virtuous survive and those who deserves too strong, but those who you would expect to be sort of weeded out by a recession get weeded out.
That's exactly right. And so a big virtue of this program is that it keeps the sort of knowledge and human capital in place that some of the best small businesses have, and knowledge of their product, of their customers, links between workers and the firms. And that's exactly right. Those are not the firms you want to destroy, because presumably we will not start having pandemics like this every 3 years. And so, right, there's no reason for us to select businesses on the basis of their resilience to a once in a century event.
But how unusual was it? I don't know, when you all made the case for this, I mean, have we done things like this in the past? It felt to me like a sort of different from the normal partisan fights, or the normal, not partisan, but even just economic theory fights, as it were, about, spend more versus spend less, and be more generous versus be less generous. It seemed like a different way of approaching it almost.
I think that's true. And so, I mean, there was a bit of a partisan element to it, but not as much as you normally would expect, and certainly not as much as we saw in the fallout from the financial crisis. And so I think in large part it's just driven by the nature of the shock here, right? Again, we have a shock that forced us to both restrict demand and supply, and to make sure that both of those can come back as quickly as possible. You had to, I think, maintain the balance sheets of people operating on both sides of the market. And so if you just pumped money into the demand side, that would not help keep that supply side intact and ready to go upon reopening. And so that's really what sets this situation apart, and it's just very different from the various economic downturns we've had over, sort of in the era of modern economics, where they have largely been, shocks aggregate demand from the Federal Reserve raising interest rates too quickly, or the very different types of supply shocks that we saw in the 70s. And so I think it's probably because of that this policy response didn't really fit people's stereotypical expectations of where more free market oriented economists, I think, would come down. What I would say is that it is important to remember that this is very much meant to be a temporary program, and if we see that we're really in this for the long haul, and entire industries are going to have to be restructured, then we should make sure that we do transition into that process of creative destruction, except that it would be almost at the sectoral level as opposed to at the firm level. But otherwise, I think it's really the unique nature of the shock that I think explains why people who would otherwise not want to send out trillions and trillions of dollars in checks were comfortable with this program.
And why I suppose some on the left were comfortable with sending so much money to the businesses rather than directly to the workers or consumers.
That's right, because so even though, I mean, you have some dissident voices on the left, I think in Congress, Democrats have been overwhelmingly supportive of this program as well, and not just Republicans. The program was expanded very dramatically quickly after it passed, and basically without objection. And so I think that is also a sign of the fact that it really does correspond to a need felt across the country, because obviously a lot of members will have heard from business owners in their districts that it's a program they really needed, because if you've been forced to shut down, eventually you're going to run out of money. Now, I mean, look, no program is perfect. I would have liked to see, for example, a restriction on the profitability of firms who accepted money from this program, something like, cap your net income at last year's level. None of that was, those kinds of restrictions were not incorporated into the program. Instead, I think certainly initially the Small Business Administration made the program too restrictive in terms of, how much money you could spend on fixed costs as opposed to labor costs. Some of that has now been undone by Congress, really directly overruling the rules set by the administrative state. I think the program unnecessarily excludes a lot of people with criminal records. There are details we can argue over, but I think in general, it's really been an important part of the relief effort. Also because the other elements of the relief effort, and so that's unemployment insurance and stimulus checks and cash for various industries, those just aren't targeted at the right people necessarily. Obviously, the checks are not targeted at all. Unemployment insurance does not go to the business owners that are at risk of getting wiped out, and it doesn't help pay for their fixed costs. Unemployment insurance also is almost designed to destroy firm worker links. To the extent that they are valuable. That's obviously not something we want. And I think we also need to recognize that the U.S.'s state capacity in executing some of these programs is not, maybe where we want it to be. I think we've seen we saw some hiccups with the rollout of the payroll protection program, but we've seen pretty significant problems with the expansion and extension of the unemployment insurance program too, right? So there are a number of states where the unemployment insurance program is just completely dysfunctional. Florida is probably the best example. We have expanded the unemployment insurance program by adding a $600 benefit a week to unemployment benefits. That's a fixed number of dollars. For a lot of workers who've been laid off, it makes it so that they earn more now than they were earning in their jobs. I think that both gives the wrong work incentives and is unfair toward the people who are still working. And we added that fixed amount of dollars, or so people say, because that's the only way in which state unemployment agencies would be capable of processing the changes to the program. Right? Ideally, what you want to do is you want to have an unemployment benefit that corresponds to some extent to what you were earning before you went into unemployment, both because it's difficult for households to adjust their fixed costs quickly, right? You still have a mortgage to pay, and so you want something that resembles your previous state of income, and because of the incentive effects. And so the fact that the only way in which we can make the unemployment system more generous is through this very wasteful lump sum approach really suggests, I think, that we should try to exploit other avenues as well, just because the demand side capability we have set up is just not I think, fine-tunable enough for the kind of policy response you'd like to see.
And on just PPP, one more thing about that, which I think has been the most important fiscal response, I suppose. I mean, we can talk about the Fed for a minute, but how worried are you that that does come to an end? It seems like different firms can stretch it out more or less, and there's different deadlines depending on when you got your loan, as I understand it. But it feels like that's kind of a September-ish. The business owners stop getting the money, and also stop having to abide by the restrictions on laying people off, which they have agreed to get the money, or at least which they've agreed to convert the money from a loan into a grant, I think is maybe the right way to say it. So, I mean, how worried will there be a moment where we'll see, oh my God, an awful lot of these firms small businesses aren't viable? Well, we'll see some of them aren't, obviously, but what will be that, when do you think that rubber hits the road, sort of?
So the program has been made a little more flexible, and so I don't think we'll see this once and for all end to the program in that dramatic way. Also, the problems with the rollout initially, of course, make it so that people enter the program at different times, and so it'll be a little more spread out because of that. That was certainly not by design, but that is how it will work out. I mean, I would hope that we don't go from full PPP to nothing. Right? You can think of ways to smooth it out a little, maybe provide more support to businesses that are operating under government restrictions. Right? That may be a way to do it that I think is at least fair. Of course, if those government restrictions are going to remain in place for the foreseeable future, that's not something we want to do. And so, I mean, I think part of what we just don't know yet is where we will be in September in terms of, consumer behavior and local government restrictions as they relate to the public health threat. Right? If the threat is basically gone by then, which is the way it looks now in Europe and in East Asia, then I think that creates a very different scenario, and one where, ironically, you may want to support a little more support to businesses because that a lot of businesses are going to be viable. Than if we say, okay, well, it looks like it's going to be another 2 years of dramatic restrictions in certainly in some services sectors. In which case we will have to say, look, that's too much, and we have to start thinking about the structural transformation and how can we facilitate that as opposed to keeping businesses afloat.
I mean, what strikes me listening to you on that is that would suggest a political system that has the capacity to reasonably make judgments in September and October, which I'm not so sure. And that's an interesting question. And I mean, more generally, have you been struck? I'm curious about a couple of things. I'll get back actually to the practical kind of questions, but at a more political economy level almost. I mean, how struck are you by the capacity or lack thereof of the political system, of the state structure? I mean, the PPP seems to me, in a way, a pretty impressive model of the economics profession and the political class and others coming together pretty quickly on what seems like a reasonable response, a little bit different from what either party or what a lot of established economists might have thought at first. So that's kind of a good sign, you might say, that we're not totally encrusted in outdated models and that we're not incapable of dealing with crises and so forth. On the other hand, or maybe it's just a one-off, which was such an incredible shock. And I don't know, I'm just generally interested in you commented.
Yeah, so I think I think the response from Congress has been much better than I expected. In fact, I think there are two factors that help there. One is the experience from the Great Recession, where I think over time the people have come to see that perhaps a more aggressive fiscal response earlier on would have been worth it. A lot of people were worried about the debt situation, which just hasn't been an issue at all, and interest rates are at all-time lows. People were concerned about inflation, which hasn't been an issue at all, and in fact, we're now on month 3 of deflation. And so I think that experience helps a lot. And then secondly, I think the political constellation with the Republican president is probably what you needed for this kind of dramatic fiscal response, because I think Democrats are more willing to take these kinds of measures generally, and then Republicans are more willing to go along if they are in control of the White House because they're not in an oppositional mindset. And so I think those two things have really made a difference. And so again, I think the package was kind of impressive. It was very broad, really using all the different levers we have, from the unemployment insurance program to the payroll protection program, to working through other layers of government a little bit by giving money to states and localities. The Federal Reserve, I think, also responded very aggressively right off the bat, ready to go, obviously, also with a lot of experience from the past 10 years, and not as constrained by concerns about inflation as they were in 09, 10, 11, 12. And so I think that's all been pretty good. I think, as I was saying, on the operational side, it's a little less impressive. The PPP, I think, worked reasonably well, but obviously in large part through the private sector, right, with people's regular lenders and the banking sector doing a lot of the legwork. That has the advantage that that's a massive network of places where people can get money. It has the downside that people's pre-existing ties to lenders will have given them a leg up initially when applying for loans, and that may be seen as unfair in some parts. But I think that worked well. So I think I think it's just disappointing that we can't really target cash payments. We can't really fine-tune the unemployment insurance system in ways that we would like to. I think even the people who support, continuing with a dramatic expansion of the unemployment insurance system, which I am not. Even those people, I think, would benefit from a system that allows for more fine-tuning, just because it would let them address some of the most obvious concerns about sending these massive checks to certainly low-income workers in low-income states where you get replacement rates that are well above 150%. Which will make it impossible for people to choose reasonably between providing for their family and going back to work. Right? I don't think we want to put people in that position. And so, I think overall the political response has been quite good. In part, also, I think the economics profession is a little. There's definitely a professional, esprit de corps, but still quite a bit of ideological diversity in a way that not all other academic fields have. I think the political response has been good. I think the implementation there, we've really seen that there are just aspects that need to be worked on. If not now, then certainly in time for the next downturn.
But it does sound as if, as with the public health side of it too, it's not, as I think Dr. Fauci said yesterday, it's not over by any means. It may not even be mostly over. And I guess the question is, can the political system kind of leave aside, in a way, the election even, can it sort of generate intelligent responses either September, October, or after the election, or in a new administration? And that will be one test, as well as the actual implementation tests, right? I mean, and what about?
Yeah, so then there I'm a lot less optimistic, but
yeah.
But for now, so far so good, I think.
Yeah, that's a question though. It would be interesting. I guess that wouldn't be unusual in a way to have a reasonable first response and mobilization almost, and people's better instincts take over or whatever. But then the second or third time, you get a little more either partisan sniping or regional differences, or I don't know what exactly, or just confusion maybe. I don't know. How worried are you about state and local governments? I mean, they're taking a huge hit in tax revenues, presumably.
Yeah, a little bit. So the concern there is that it's just very unnecessary to lay off the employees of the public sector at the worst point of a recession, right? It harms all the other parts of the economy, and I just don't think it's the time for it. It's not something people planned for. The federal government has provided quite a bit of money already to state and local governments, but in a very very much in an earmarked fashion, right? So a lot of money that can only be used for public health type responses. There's a coronavirus relief fund of $150 billion. Again, pretty significant amount of money. It may have been more reasonable to send that out as general revenue, maybe general revenue that you cannot use for pension contributions. Though it's obviously hard to check that. The Federal Reserve has also set up a municipal liquidity facility that will lend up to $500 billion to states, localities, and territories. And so there has been some action. I just think it'd be wise to just say, look, in the fiscal year that ends now, states don't have any leeway, especially the states that are not allowed to carry over a budget deficit to the next fiscal year, which is a significant number of them. And then for next year, I think we have an okay sense of what the shortfalls are going to look like. Some states will be able to cover that shortfall from their rainy day funds. Other states do not. I think we have to be realistic. And look, our system is set up in such a way that we do not want the states to run deficits and run up debt just to cover operational expenses. I think that's fine, but that comes with the flip side of, in a sudden severe downturn, the part of the government, of the part of the public sector that is able to borrow for those purposes should provide a backstop. I think that's just how we've designed our system of fiscal federalism, with relatively tight balanced budget requirements at the state level, and unlimited borrowing at the federal level. I think that's a workable system, but you do have to, if you want that kind of system, and the same applies to localities, to cities and counties, which typically cannot run deficits. If you want to have that system because you want to constrain the state and local decision makers that way, then that comes with the responsibility to provide funds when a sudden negative shock hits.
And there will be a need to provide such funds, it sounds like. And it sounds
I don't think it has to be $1 trillion, but I think $100-200 billion. So that order of magnitude, I think, would go a long way in addressing the biggest concerns.
And you wouldn't worry too much about the moral hazard of helping states that have been irresponsible and have.
Well, so I don't think getting hit by a pandemic produces a ton of moral hazard. I think, in fact, some of the funds that have been released so far could only be used for expenditures that had not been budgeted for by the states. And so, in a sense, the states that were the least prepared for a public health crisis had the most flexibility in applying these funds because they hadn't budgeted for any kind of public health expenditures. So I mean, I think the moral hazard risks are more in place when it comes to the funding for public sector pensions and things like that. And so I do think we have to make sure that those are not where the money goes now. It will be bad for those, bad for taxpayers that are paying to bail out those funds in states that they are not responsible for. I think it also would just buy time for public sector pension funds that are just poorly run. I think it'd be much better if we were. I mean, I could even envision a situation where you give a little bit of money to the pension funds that struggle the most under very drastic conditionality, where they have to start fully funding them, they have to start applying reasonable accounting rules, and not count on 9% returns year over year. I don't know. I think that's the area where there is real moral hazard, and so I think we have to be cautious and careful there. My colleague Andrew Biggs has written a number of columns on how to manage that, but I think it's really hard to argue that there's a risk that if we help states deal with this dramatic shock from the pandemic, that they will start behaving in a way that leads to more pandemics. That just doesn't strike me as a plausible source of moral hazard.
Yeah, I guess it's not really moral hazard. I agree with that. It's used now as an all-encompassing term to kind of argue against helping anyone anytime. And of course, there is a little bit of unfairness, if you will, that the one who gets helped the most are the ones who need the most help. But that's just life in some ways, and presumably it's an interest.
I think it's helpful to separate out redistribution and moral hazard. I think those are two very different.
And what about the sort of old-fashioned, hey, I mean, isn't there kind of a problem here, medium, longer term, that we are amassing a huge amount of debt, and we're also doing it. Now, the good news is we're doing it at low interest rates, but can that last forever? And just the obvious kind of questions about, federal government can't just print trillions of dollars year after year. So,
no, I'm concerned about that. I think we we should have come into this crisis at much lower debt levels. I think we could have done that over the past 5 years or so. I think we could have made some inroads. We should certainly, I think, once this immediate crisis is over, we should go back to thinking, how can we set up our largest social insurance programs in different ways? So, this Social Security and Medicare. People don't like to talk about changing these programs, but they are the things the federal government really spends money on. I think those programs are also so large that they can easily make up for, the kind of emergency expenditures we are doing now. And in fact, one thing I would hope is that, even people on the left, I would hope that they look at this crisis and they say, it's just incredible. We spend half of the government budget. I mean, exaggerating a little bit. Half of the government budget goes to healthcare, and we don't have masks. We are completely unprepared for an infectious disease outbreak. That's if we're going to provide public goods, certainly combating infectious diseases should be at the core of that. Massive externalities, hard to predict, and so it's impossible for people individually to deal with them. That should be at the core of what the federal government does in terms of healthcare and public health. It should not be, trying to do income redistribution through, direct provision of healthcare, through subsidizing insurance packages, through providing effectively premium support to elderly people. It should, first and foremost, it needs to deal with these core elements of healthcare and public health. And I hope we see some of that.
Yeah, and the failures of CDC and FDA, it looks like, separate from President Trump's own problems, does make you wonder. Again, it's kind of a state capacity issue. We seem to be spending an awful lot of money and maybe not focusing it in the right way, and there's a lack of accountability and so forth. I mean, I don't know if anyone will take that lesson, though, but...
well, I try to remain hopeful,
Yeah, that's
I sit here locked up at home for months on end, so I try to,
What lessons do you take from other countries' responses? Any interesting contrasts or comparisons from, other developed countries?
I think so. It's been interesting to see. I think the variations in the lockdown restrictions that we've seen across countries. My overall sense is that those marginal differences in how far from home are people allowed to walk, and which specific businesses do we keep open, to the extent that those differences have had an effect. I think they've been too small to measure, and so I think one source of dramatic variation in death counts, certainly across countries, is just how people have dealt, how countries and states here in the U.S. have dealt with the most vulnerable, locations and people. Right, we've seen a ton of deaths at nursing homes, and so I think protecting those and being very cautious with those should have been a much more central focus of the public health effort than not letting people go to parks and things. I think having significant variation across countries has been helpful. I think it's unfortunate, but I think that the public health threat in the U.S. is going to linger a little longer than it has in Europe. As I said earlier, we seem to be on a bit of a plateau, while the number of new cases in Europe and in East Asia has gone to almost negligible levels by now. We will be able to evaluate the different policy responses, I think, across countries. So there are countries that have leaned much more heavily on people working part-time or on wage subsidies and things like that. I guess the counterpart in the U.S. would be the PPP program. Europe is much more focused, just because of how its labor market institutions are set up, typically on maintaining firm worker ties than the U.S. is, right, which has relied much more on creative destruction and on the unemployment insurance program. And so for this type of crisis, I think that European setup may work a little better. We'll see. And, if that turns out to be the case, then perhaps we should think about at least building up the ability to use similar programs here in the U.S. I think it's not I think broader lessons I think are difficult to draw. Sort of everyone has been very aggressive on the fiscal policy front. I think perhaps one interesting comparison between Europe and the U.S. is that relationship between between the federal government and the states in the U.S. versus the European Union and the member states in the European Union. The European Union has taken a couple of pretty dramatic actions. It has provided public health support, which is traditionally not a union level responsibility. It has provided almost 2% of GDP in support to the member states through the ESM, and it's now discussing setting up a recovery fund through the Commission, for which the member states would borrow jointly. Right, so that's really so people call it Europe's Hamiltonian moment, right, where they're really fiscal capacity arises at the federal level. I think that would be both symbolically incredibly important, and the amount of money involved is pretty large by EU standards. So they're talking about 750 billion euros. That is about as much as the European Union spends usually in a 5-year period, right? And so that's a tremendous, right? It's obviously the European Union budget is incomparable to the federal budget here in the US, but it makes it seem like the EU is slowly drifting toward, I think, the system that the US at least implicitly has, right? Where the states are very constrained by balanced budgets, but the federal government bills them out when there's a big negative shock, right? We can argue over the extent to which that should happen, but it certainly happens to some extent and has done so in crises past. And so I think that, it's been an important missing element in the EU's integration. These kinds of money flows across member states during downturns. I don't know that a central fiscal authority is necessarily the path I would have chosen, but might as well give it a try. And this crisis seems to give us the opportunity to do so.
Yeah, that's interesting about the EU. We'll have to come back and have another discussion about that in a year, since it might be that this crisis coming out of nowhere will do more to change the character of the EU, or maybe accelerate things that were already beginning to happen than all the planning and all the debates and so forth. I guess that's how life often is. I'm struck just in this conversation, which I think has been very interesting. It does seem like an awful lot depends on the public health situation, that at the end of the day, you can have all the spending you want and all the intelligent, even federal programs you want, but if people aren't reasonably confident about either because of a vaccine or because of therapeutics or because it just is, the curve is bent so much that people feel like they can, or there's enough testing or enough contact tracing, all that. I mean, it's just going to be hard to get back to where we were. And conversely, if you did solve that problem, it doesn't sound from your account that there's that the devastation has been so great that it would be, that you couldn't recover pretty quickly, actually, if a lot of people felt healthy and just went about rebuilding their businesses or building new ones. Is that sort of right?
Yeah, but I think the longer the public health threat continues, the smaller the bump will get when it ends, right? So right now, a lot of businesses are, right, if we had a vaccine tomorrow, if everyone were vaccinated tomorrow, businesses would still be intact. Some households, will have struggled. Certainly, there's groups that have been completely left out of the relief effort. Like there's, millions of undocumented immigrants who haven't received as much support. So certainly some households would still struggle, but in principle, we'd be able to go back to normal immedially. Right? The restaurants are still there. Some of them are boarded up, certainly here in DC, but in principle, we'd be able to go back to normal. If we have a vaccine a year from now, that initial jolt will just be much more limited. And so, I think right now we'd be able to return quickly. I don't know that that will be the case when we actually do overcome the public health crisis,
and how thoroughly we overcome it, since it's not going to be 100%
that's right. Yeah, right. So
or 0%.
I think I think the expectation in April really was, we lock down, and then 2 months from now the worst will be over. Maybe we'll switch to test and trace. Maybe there'll be the occasional outbreak and we'll have to lock down locally, but that's really not the point we're at yet. And so I think I've grown a little less optimistic than I was back then. And I mean, in fairness to April me, that is the situation we're seeing in a bunch of countries, right? We see it in Australia, New Zealand, South Korea, places where the public health response appears to have been a little more effective. But yeah, so I think the longer the public health crisis goes on, and hopefully we find treatment and a vaccine, but longer it goes on, the smaller also the jolt will be, just because firms will have gone under, households will have to deal with that overhang. There's all kinds of issues like that will slowly build up over time and just make it more make the positive shock from the vaccine smaller.
I mean, what most alarms me about the way you just put it, which I think is a very helpful way to put it, is it's not just that we're not quite as far along as we had hoped to be in some areas. It's not clear to me we're even trying to get to some of these areas. So obviously there's a lot of work going into the vaccine and to therapeutics, but on test and trace and on thinking through the intelligent and not so intelligent ways to do the distancing and sensible policies, I mean, you get the feeling there's as much just passive now, kind of governments observing things or issuing vague opinions one way or the other, and citizens are, I think, confused. And also, I worry that, what I'm taking from what you're saying is that the price we could pay for that is pretty considerable. It's not, and maybe also you get to some tipping point situations, right, where it's not as if you just, for every, I'm obviously making this up, but for every percentage point or 10 percentage points of infection, you pay some price, and 1% or 10 percentage points of the comeback. But it also, at some point, enough firms go out of business that you are looking at a whole different situation in terms of the labor market and businesses' capability to get back going and so forth.
Yeah, I agree, and I agree with you that it almost seems like we've moved on from trying to deal with the pandemic. It doesn't strike me that the federal government, the executive branch of the federal government, is really trying to do anything at this point to try and set up a system of test and trace. To the extent that they are focused on making policy, it seems like they are trying to set immigration levels to 0 or negative, and that's about it. I think at the state level, some places are, making a good faith effort to set up a test and trace system. But again, it's difficult for states, right, when they're dealing with revenue losses and there's money they get from the federal government, but they just don't have the same scale and the same scope as the federal government does in this area. There are private sector actors. Some universities are trying to set up their own test and trace systems. I believe UCSD is reasonably far along there, but that's you can't insulate yourself from an epidemic, right? That's exactly the nature of an infectious disease, that the externalities are tremendous, and it's hard for individual actors to protect themselves and operate without the support of the highest level of government.
I mean, I think even if you couldn't do the tracing, which is hard, obviously, and labor-intensive in a massive country, it does seem like the testing, I mean, this is really more for, I suppose, the public health experts, but it has huge economic implications. The testing would be so helpful and reassuring, and the lack of just the instantly available, so far at least, cheap tests, that just having that would allow an awful lot of employers, I should think, an awful lot of schools and universities to function maybe not at 100% of where they were, but at a much higher percentage of where they were, and probably over the tipping point of functionality, so to speak, which if you're really flying blind in terms of who might have been exposed, and if there's an outbreak somewhere, are you going to start restricting travel again? And I just think, how does that affect higher education, for example, where people go from all over the country to other places? Or how does it affect businesses where people are used to traveling? I mean, I don't know. Maybe I'm wrong, but I'm pretty alarmed personally about the not just the failure to make progress in some of these areas, because there is much more testing, of course, than there was 2 or 3 months ago, but the failure to have the sense that we really need to resolve this pretty well, not perfectly, but pretty well, to have a reasonable economic comeback? Or am I maybe overstating how much we need to resolve that? Maybe we can do okay with just a kind of low-level infection, if you want to think of it that way, low-level fever. It's like
yeah, maybe. I mean, right. That's the alternative, right? Maybe people have gotten good enough at social distancing that we will manage to keep the pandemic under control, at least in the sense that hospitals won't be overrun. Obviously, that would still come at a significant economic cost because it would mean that we would have to extend these social distancing measures. That restaurants won't be able to operate at full capacity. It'll be difficult for hotels and casinos and entertainment venues. There'll have to be a lot of working from home, which is obviously not ideal for people in every household situation. And so it would come at a cost, but I think I don't know. I think it's hard for me to forecast the public health situation exactly, but I just think that under the sort of current level of reopening that we see in places like DC or New York, a lot of businesses just aren't going to be able to come back, and so we will start seeing bankruptcies and significantly elevated unemployment. Right? It's not. I don't think it's a binary of either we have no disease or completely out of control pandemic. I think even in between, there's still variation that matters for economic outcomes as well.
And finally, you're a professor, and you're I think supposed to teach at Harvard. And I'm sure they haven't. I guess they haven't made decisions yet, and I don't want you to reveal any private conversations that they've had. But what's your sense? I mean, it does seem to me make a bit difference both in terms of reality, but also psychologically, if both K through 12 and higher education basically open up again, obviously with all kinds of changes in practice and special provisions for people who shouldn't be there in person and so forth, either teachers or students or others, on the one hand, or if it seems like the fall term kind of goes the way of this last half of this last spring term. I just feel like psychologically that'll be a very different place for the country on Labor Day. But I don't know, maybe I'm overstating that because I come from a sort of, I've been focused on the academy most of my life in one way or the other. And so maybe I overstate the importance of that. I don't know.
Yeah, so I think it's incredibly important, especially for the ability of parents of children under the age of 18 or under the age of 12 to go back to work in a normal fashion. Some countries have reopened the schools to, maybe not fully, but to some extent it seems to be going okay. I think there's some hope that, children just don't transmit the virus in as effective, I guess, a way as adults do. So we'll see about that. For higher education, I imagine that a lot of institutions will desperately try to reopen on campus in the fall, just because the value proposition is very different if their students are online at home. Harvard, so 6 of its professional schools have announced that they'll be doing the entire fall term online. Part of the problem for a lot of universities and certainly for professional schools is going to be that it's practically impossible for international students to get visas for next year. And so I think they can enroll from abroad and participate online, but they wouldn't be able to come to campus anyway. And so at that point, if you have a student body that's 20, 30, 40% international students, you're almost forced to do a hybrid offering anyway. And then, is it fair to have some students on campus, others online? Maybe not. And so you start drifting toward online offerings. I think I believe Harvard Business School offered people the opportunity to defer, and so a significant chunk of the incoming class has done that. But other universities are declaring that they'll be on campus. I think Purdue has said that. Northeastern has announced that they'll be on campus in person. And I hadn't really thought about this because honestly, science I'm not particularly interested in, but obviously there are fields where people need labs and physical material, and so it's a little harder to do those online. And so I think for the arts and sciences parts of universities, that also influences the decision making. I am worried about this. Obviously the fall term is problematic, but in the long run, the economic damage from just not having the country's research capabilities up and running is going to hurt in terms of innovation. Also relative to other countries that are relative to China, which is I think basically back to operating as normal. I think the U.S. higher education is one of its big strengths. Also in terms of geopolitics, and so I do worry that it won't be able to operate at capacity. A lot of schools will struggle if they can't offer a full on-campus program. A lot of schools will suffer inevitably because their international students can't come. And so it is something I'm concerned about. At the university, at the higher education level, not so much because it restricts parents' ability to work if their kids aren't in college, but really just on those fronts, right? Sort of the high end of human capital building and research and development.
I mean, I guess at the K through 12 levels swamps it, obviously, in terms of numbers and in terms of the inconvenience, more than inconvenience even for parents, and then the ripple effects of not having your kids off at school in terms of daycare and just a million things, and your own ability to work and to go places, and both with two-parent families or one-parent.
So I think in the short run, K through 12 is much more important. I think in the long run, damage from not having.
And there it does seem like the good news is the kids transmit it much less effectively. But on the other hand, I mean, I was thinking about this. If you just had one outbreak somewhere, and let's just even say a city, you had to close down for, the amount of chaos. Everyone could be heaving a sigh of relief, and suddenly in New York City on October 10th, there's 2 outbreaks in 2 different schools, and are they going to keep the other schools going? Well, maybe, or maybe they'll just close them all, and suddenly a bunch of parents who've just gone back to work are facing what to do with their kids, and their employers are facing people not showing up. I think people still, again, maybe this is my bearish personality or something, are kind of underestimating, if you don't get the public health situation reasonably under control, how at risk a recovery would be, I guess. It seems we've all gone through 07, 08, 09. That recovery was slow and difficult and very contentious politically, but it did go pretty smoothly, in the sense that there was not much of a second dip, right? There were tiny hiccups, I guess you'd say. I think there might have been
there was the debt crisis. There was the Eurozone crisis.
But
which
basically,
really,
every quarterly number, I think maybe with one exception or two, was positive in GDP from the bottom in 09. And so people have a psychological expectation, I think, now of a kind of, they may not expect a V recovery, but they expect, what's the right letter, a smooth up curve. And if you get a real hiccup 2-3 quarters in, I wonder what the effect of that is. Maybe we just ride it out, but I don't know. Again, it would seem like a good idea to get the public health situation under control.
Yeah, for sure. Also because I think after the large protests we've seen, and I think even before that, people were tiring of the stay-at-home orders. It's also going to be increasingly more difficult to ask people to sacrifice their livelihoods and and their ability to go outside if it doesn't bring a solution that lasts, and instead it's just it buys us a few weeks and then we go back, and I think that just seems politically untenable to me to do repeatedly.
Yeah, that would be pretty disastrous. Well, I guess that suggests that good economic policy can only go so far, right? You need to have good political, sensible political action, and good public health policy. There's only so much.
There's a school of macroeconomics, the real business cycles, and people often mock it because most of in its most caricatured version, all of the economic fluctuations are caused by shocks to technology.
Right.
But that really does seem to be the case here, that we just, we have these unexplainable negative shocks. You have to work around it, but you can't, economic policy itself cannot address these massive shocks. It can only provide a cushion.
We should end on that rare admission of humility and by an economist. So that was a great moment of honesty there from Stan Veuger. Stan, thanks so much for joining me today, and we'll resume this discussion maybe seriously in 3 or 4 months when we have a little more sense of how we've gotten through the opening of school and sort of where things look in September or October. I do have the feeling that we'll have some more clarity at that point of Let's hope it's
Certainly
let's
hope
hope
so.
it's hopeful clarity. You're right. Stan Veuger, thank you for joining me today, and thank you for joining us on Conversations.